Welcome back to the Max Report, the Global Resource Guide for Payments and Cash Management. I'm really pleased in part 2 to be joined by Wayne Mills of ETR Digital. Wayne, please tell us a little bit about ETR Digital and possibly what challenges you saw out there that ETR decided it could provide solutions for.
So ETR Digital, we're a technology business and we produce digital negotiable instruments.
I understand a negotiable instrument is something like a bearer bond maybe, or a bill of exchange.
Yeah.
What's a digital negotiable instrument?
So in terms of 101 and certainly what ETR focus on, bill of exchange and a promissory note produced in digital form, which, I'm sure we'll come on to, but has many advantages over its paper counterpart. The critical thing is these instruments have been used for decades, possibly centuries, in international trade as a way of buying and selling. And the opportunity now exists to use these old established instruments in new ways. So we've got the law supporting these changes, and we've got an opportunity for companies to now look at these instruments in a way which they previously weren't able to in paper form.
So because it's digital, there's obviously some advantage to it. I mean, if I'm holding a bill of exchange, I have a debt that possibly is drawn on you, and I can therefore say, Wayne owes me money. But what's the difference in a digital one? Is it simply that it's easier to look at on your computer?
What the digital aspect brings is really a couple of things. Is one, in order to issue, send, accept that bill or that negotiable instruments, it happens far more quickly. It happens in minutes rather than days. But as a holder of one of these negotiable instruments, you've got the same enforcement rights, whether it's in paper or it's in digital form.
So if I was to draw a parallel with the payments world, you're saying that a digital negotiable instrument will make things happen quicker. If I can do things quicker, if I can bring cash in quicker, then I'm improving my DSO. I'm possibly ensuring that if I want to discount that instrument, it'll get done in an instant rather than a long-winded paper chain where people have to sign documents.
Spot on, yeah. And again, the critical point about holding the instrument is it's an unconditional obligation to pay. So if you're holding one of these instruments, the other party who has the obligation to pay, it's separate from a commercial contract, a supply contract, any other obligation that you have in contract law. It's an enforceable obligation.
Now, I'm a corporate treasurer, yeah, and I like the idea of what you're saying. But then if I take this capability from ETR Digital, am I buying, as it were, like a digital island? Am I taking a piece of software that's going to sit on its own and it's not going to talk to the rest of my ERP, my treasury management system, my trade finance systems? Is it going to sit on its own and then I end up still having to do manual intervention to get the data from ETR Digital's software into my other software?
It's a great question, because what we see in a global context is there are certainly lots of islands of innovation. So the corporate treasurers we speak to, there is continued frustration that there are just too many solutions that don't talk to each other. So whether that's in payments, we know from talking to treasurers, top 3 issues typically around liquidity, risk and technology. So actually ETR Digital Solutions can actually address all of those in terms of liquidity management, helping to get more cash into the business more quickly. From a risk point of view, as I mentioned, avoiding the risk of fraud, avoiding the risk of duplicate documents. And then from a technological point of view, we still see treasury teams using old systems and antiquated processes which are inefficient, which gives problems with cash forecasting. So you've really touched on the central use, I think, of digital negotiable instruments. It's a bit like a Swiss Army knife, if you like. You've got multiple ways in which you can use a negotiable instrument. If you choose to extend your DPO, improve your cash conversion cycle, that is absolutely one use we're seeing for these negotiable instruments. Perhaps sitting on excess cash, and you see it as a way of reducing fraud risk in your business. Again, that's a live use case that we're seeing that treasurers are using these things for. The reality is most treasurers are using these things for a combination of those different purposes, but the inherent flexibility of these digital instruments means that treasurers now have the ability to use these in a context they haven't before. And the final point on that, I'd say, is many people will see bills of exchange and promissory notes in a documentary trade sense, often, as the payment instrument behind the letter of credit. Increasingly now, these instruments are being used in an open account sense. So supply chain finance, receivables finance, because the flexibility of the instruments now means that treasurers have got an opportunity to use, for example, promissory notes to access post-maturity finance. And I won't go into what that is in detail now, but essentially the ease with which you can extend an instrument, still avoid the risk of reclassification from a trade payable to financial debt, which is very important for many companies, means that treasurers now have more options.
Okay, I'm going to change tack a little bit here. What are the three other things that you're looking at in terms of what's moving the market in payments, cash management, treasury management? Are there any particular new technologies that you're thinking about? How can I work with that? Is it about tokenization? Is it about stablecoin? Is it about cryptocurrencies? What's on your mind?
Yeah, it's really interesting at the moment in terms of the patchwork, I think, of opportunities. Because if we think about the relationship with trade finance and payments and cash management, for example, often, certainly in banks where I worked for many years, they're separate verticals. Sometimes those verticals talk to each other, but they are different disciplines, they're different skill sets. But we're viewing the world really as a Venn diagram where there's increasing overlap, where this almost puts us in the seat of the treasurer, where we can see the interrelationship with cash management, payments, and trade, because actually they're all codependent. So by using a digital negotiable instruments as a method of settlement, and with any trade there's a buyer and a seller and a payment, using that payment mechanism at the end can help the treasurer to manage cash, can help use payment rails which are already established when the digital negotiable instrument becomes due for payment. So we're seeing this actually more as a treasury solution than a trade solution. The other observation that we see in the market, I think, is we've built this technology specifically for treasury problems that have been identified. If we think about previous attempts at consortia or things like blockchain solutions, there is certainly feedback we get from treasurers. Some of it looks like a solution looking for a problem. We're partnering with other people that focus on those. So we are, if you like, laser focused on that, two instruments in the financial supply chain and those use cases.
You mentioned that you were listening to your clients, and at the same time, you've got a value proposition to talk to your clients about. How are you communicating that value proposition? How are you getting that across to the clients? Because, as you said, the inertia is what you need to overcome. And there's so much stuff for people to look at that it's kind of confusing, which invariably leads to either poor decision or no decision.
No, absolutely. And there is certainly a piece that we are heavily involved with around education and awareness. I think bringing things like, what some people may see as a fairly dry subject, I actually think it's really exciting in terms of the opportunities that are there for treasurers and for others. What it talks to, though, is a changing shift in the financial market, I think, because banks typically own the majority of corporate relationships. We have an increasing amount of private credit, non-bank funding, looking at trade as an asset class, which is very attractive, low default rates through the cycle, very resilient. But then we need to find that bridge between making that trade finance asset class accessible. So then you get to tokenization. So actually then with digital negotiable instruments, you then very quickly get to this, and we're having conversations every week with private credit funds and family offices who say, well, if you can digitally give me an instrument which is legally robust and enforceable, I don't have to have a large integration program to consume the technology. And actually, I can deploy my capital in a very easy way and get the required yield. That's exactly where we are right now.
You spoke at another forum about open-minded curiosity.
Yes.
That's a phrase that you've used. I've heard you use it. Do you want to just expand a bit on what do you mean by that? Is that the curiosity of the corporate treasurer, or does it go a bit more deeper than that?
Yeah, I think it certainly goes deeper. I think primarily from a treasury perspective, most treasurers I know are not overstaffed. They have too many competing priorities, and the inertia comes about from either perhaps not fully understanding the benefits or understanding it's a, D&I it's a relative value concept, because nobody's ever said to me it's a bad idea. I think the opportunity for treasurers in terms of being open-minded is just give it a chance. It's very easy just to park it. I think the curiosity and the open-mindedness also then needs to spread to banks. For me, this is the renaissance period for bills of exchange and promissory notes. If you listen to people like the International Chamber of Commerce, if you listen to World Bank, if you look at government policy around UK growth, there is a huge push for this in terms of this can really unlock some prosperity and economic growth. So when I talk about open-minded curiosity, I think my ask to everybody would just be give it a chance.
So I have open-minded curiosity.
Excellent.
Where do I go?
ETR.digital is where you can find us. Happy to talk to anybody that would like to engage.
Okay, super. Wayne, thank you very much. There's also some white papers and research material that ETR has put on maxdirectory.com and no doubt in the directory as well. Thank you all for watching, and we look forward to seeing you next time on the Max Report.